Okay, so payroll, as we all know, is really important to us as employees. That's how we get paid, and also to the organizations we work for, because payroll happens to be one of the most significant costs in running programs, right? If there is no employees, no payroll, we can't run our programs. So let's review payroll from a few different perspectives. So first perspective is, let's talk about payroll components. So payroll normally consists of wages and salaries. There's also holiday and vacation pay. Then there is statutory deductions. So there's employment insurance, Canada pension plan, and income tax. Applicable to taxable employees only, of course. For treaty employees working for a treaty organization, there is no income tax. And we'll speak about it further, about the exemption. Now, there's also non-statutory deductions, meaning they're not prescribed by law. So there's a pension plan, group insurance, and sometimes there is employee savings. Also, what I don't have here, but happens often, is the employee loans, right? Employees can get loans either through their employer or through ASCII Financial and similar organizations, and then the loan repayment runs through payroll. Now, there is also related liabilities or amounts owing. So when we deduct those statutory and non-statutory deductions of our employees, we have to eventually remit them either to the government or to our pension plan and group insurance provider. And so until we remit them, those amounts would sit in accounts payable and payroll liabilities, and we'll have payroll deductions payable, and then potentially we'll have some accruals. So if our organization owes vacation to employees, then we'll have an accrual for that vacation. And payroll accrual is when our year-end falls before an end of a payroll period. So some of the payroll that belongs to the year-end is not going to get paid until the next year. And we have to accrue, we have to account for that portion of payroll that belongs to our year-end. So now we're going to talk about the law for all these components of payroll. And what normally happens is the provincial labor boards rule and issue relevant law that governs all the payroll and wages. Now, when we speak about First Nation communities, many times lawyers would say federal law applies as well. So if you are working for First Nation, then definitely consult your lawyer if you have a significant or a contentious employment issue, because you may have the provincial labor board law apply because you're in the jurisdiction of the province, even though it's considered First Nation land, but for employment standards purposes, province still has a say. And then also federal law may apply because it's a First Nation. So we're going to go through the rules in the Ontario employment standards. Keep in mind those rules, they're the minimum requirements that employers have to follow and provide to their employees. If your organization chooses to provide further benefits or maybe greater vacation time or overtime allowances and so on, that is good. That's okay. You don't have to ever worry about providing more than the basic standards. This is just an overview of what the basic requirements of employment standards are. Okay, so let's speak about wages and holiday pay. So wages can be hourly or salary, it could be full-time or part-time. Minimum wage in Ontario is currently $15.50 per hour. Now, overtime pay, the minimum overtime pay is 1.5 times of employees' hourly rate or their salary, whatever their normal compensation is. Now, based on employment standards, the calculation for overtime is done weekly. It's not daily. So if an employee worked more than 44 hours in a week, then we have to calculate overtime and pay 1.5 times for the overtime of their regular wages. Okay. So now many times there is a confusion because somebody may work overtime on a certain day, right? Instead of say working 8 or 9 hours, they work 10 or 11. But if during that week that was offset by working less in a different day, then the basic employment law, employment standards don't require overtime to be paid for as long as overall hours for the week didn't exceed 44 hours. Okay. Again, your organization may have a different approach, and for as long as that approach is more beneficial to the employees than the basic employment standards, it's all good. Now, holiday pay is calculated based on wages earned in the last 20 days, including vacation. So what that means is that when we calculate our holiday pay, employment standards want us to use an average in the last month or in the last 2 pay periods if you're biweekly, so that an employee has an advantage of a calculation, for a longer period of time for the last month, as opposed to just, last week or last 2 weeks. But basically what that means is whatever an employee gets paid on a regular basis applies to statutory holiday. So if they're off, and we're all off on statutory holiday normally, so if they're not working, all they get is just their normal wages, and their vacation keeps calculating as well, right? However we pay that vacation. Now, if an employee actually works on a public holiday, then in addition to their normal wages, they also get a premium of 1.5 times of their normal wages. Okay, so that's option number 1. Option number 2, if an employee works on a public holiday, they can choose, instead of getting that premium, to get another day off instead of that public holiday. Okay, so those are again the minimum options, and you can always choose to provide more to your employees, just not less. So now, a useful resource here is there is a link to Ontario Labor Board calculators, and they help you calculate. They're pretty easy to use. They help you calculate overtime, your holiday pay, and there are some different other options that may be useful. So my suggestion is, if you work with employees and you deal with payroll, definitely familiarize yourself with the Ontario Labor Board website and the resources they have. Now, I also find helpful if I get confused, because some of these calculations may be confusing. They don't happen all the time, and when we get to it, sometimes we don't remember exactly what to do. So I find helpful just calling them. So if you just pick up the phone, call them. You don't have to say where you're from. You don't have to say any names. You can even call from, no ID phone number, and just ask a question. Just say, okay, we have an employee and here's a situation. What do we do? And they're normally really helpful with explaining it to you and referring you to further resources. Okay. Okay, so let's talk about what are the public holidays. So again, there are 9 public holidays in Ontario, and remember, labor law goes first of all provincially. They set the employment standards. Now, National Day of Truth and Reconciliation is not included in the Ontario public holidays for employment standards purposes, but it is a federal public holiday. And so is Easter Monday and Remembrance Day. So what happens here is if our organization chooses to close on these days, and for most of us, the National Day of Truth and Reconciliation, we will be closed. So in that case, that is treated as a public holiday. So our employees do get holiday pay, and if they work on a holiday, they get the 2.5 times pay or another day instead of the holiday off. Okay. So the rule is always if my organization chooses for a certain day to be a holiday, so the organization is closed, I have to treat it as a public holiday for my employees, because the employees really aren't given a choice here, right? Like, we're telling them you're off, and I'm sure they're happy, right? But this question normally comes up when somebody works on a holiday and whether to pay them the overtime premium or the public holiday premium of 1.5 or not. Okay. So vacation pay. So this gives us a minimum entitlement again. So there's 2 weeks for employment under 5 years and 3 weeks after 5 years. And so the calculation goes as 2% times the number of weeks we're entitled to. So for a 2-week vacation entitlement, it's 4% of our pay is the vacation pay. And for 3 weeks, it's 6% of our pay, and so on. Now, for most organizations that I'm aware of and you probably work for, there's going to be vacation entitlement beyond 3 weeks. So for senior employees that have been there for quite a while, they can have 4 and 5 weeks and sometimes even 6 weeks vacation entitlement. And again, this is all good for as long as we're meeting the minimum requirements here. And you would calculate the total vacation by just multiplying the number of weeks by 2%. Okay, so now labor standards say vacation must be taken within 10 months after a period, and employer has the right and obligation to schedule a vacation. So technically, an employer can choose to make a vacation mandatory. So in some cases, employees may prefer to work and not take a vacation and then get that paid to them, as an additional payment. So that, in accordance with employment standards, requires something in writing from an employee, because it's not considered a preferred situation. And really, when you think about it from an employer's perspective, your employees perform better when they're well rested. So it's good to send them on vacation. And also, it's one of important, error and fraud deterrence, internal controls, where if you see a person that never takes vacation, you always have to ask why, right? Because when somebody takes a vacation, goes on holidays, there's somebody else that normally replaces them, and they have to learn what it is they do for work, like all their duties, right? And if somebody is adamant to never take vacation, then sometimes you have to ask, what are you hiding, right? So it's a good process to have a mandatory vacation for our employees. Okay, so and a vacation pay can be added to every paycheck. According to employment standards, they want employees to agree in writing to that, or it can be paid once a year when a vacation is taken. Unused vacation accumulates and must be paid at termination. So it has to be paid within 14 days after employment ends. So let's talk about statutory deductions. So those are the deductions required by law from payroll. So we have employment insurance, Canada pension plan, and income tax from taxable employees. So in general, treaty status employees only pay into employment insurance. Okay. Canada Pension Plan or CPP is optional, but it's optional for the employer, not for the employees. So an employer can elect to contribute CPP for all employees. Okay, so it's important here to know that it's not an employee that decides whether they want to contribute, but the employer. And once the employer decided, okay, we participate in CPP, there is no pick and choose. Employees don't have an option to participate or not. They're all participating. So all employees have to participate once an employer makes that election to participate in CPP. Once the election is made, an employer can't revoke it. So if your organization is considering participation in CPP, you kind of have to look at it from a long-term perspective. Is it always going to be a good choice? And if it is, then there is a link here to a form that needs to be filed with Canada Revenue Agency, which basically says we elect to participate in CPP, even though we know it's not mandatory for our organization. Okay, so now calculation-wise, EI and CPP both have a maximum amount that changes every year, and both employee and employer contribute to EI and CPP. So for EI, the maximum amount for 2022 is $952.74 for employees. Employer pays 1.4 times employees' contribution, which becomes $1,383.84. Now for CPP, there is equal contribution for employee and employer. The maximum, let's just say 2022 contribution is $3,499.80. So now employment insurance, as you know, provides benefit to employees if they were to temporarily stop their employment or lose it completely, right? So this is where all our mat leave and compassionate benefits and also unemployment benefits come from. And Canada Pension Plan is what it is. It's a pension plan for when we retire. And again, for treaty organizations and treaty employees, it's not mandatory unless elected. Income tax, so only an employee pays into it. Employer doesn't participate in the income tax payment. And it's only applicable to taxable employees, non-status employees. So those deductions of EI, CPP, and income tax that we take off employee pay, they must be remitted to Canada Revenue Agency, normally by the 15th of the following month. Okay, so there is one other important thing is if our payroll is large, then we can become what's called an accelerated remitter. So there is two types of accelerated remitters, and if we are one of them, Canada Revenue Agency will send us a letter saying you're an accelerated remitter now, and this is when we need you to remit. So there is a remittance twice a month, normally by the 25th of the same month and the 10th of the following month. There is also another accelerated remitter option, and again, you'll get a letter from CRA saying this is what you have to do now. So those source deductions, CPP, EI, and income tax that we withheld from employees, they really have to be remitted to Canada Revenue Agency on time, because there is a 10% penalty for late source deductions. Now that can be a lot of money. One of my First Nations, maybe about, I want to say 10 years ago, they had some cash flow issues in the education department. their remittances were about $50,000 a month. So anytime they were late, there was a $5,000 penalty, even if you late by 1 day. Okay, so CRA have to receive your source deductions by the deadline. Some people think that just putting a check in the mail by the deadline should work because of the postal stamp. In this case, no, they have to have the money by the deadline. Okay. Now, for First Nation communities, CRA have instituted a policy of penalty exempt status. Okay, so their system would automatically not apply penalty to First Nations if you're late. Now, that started about, I want to say maybe 4 or 5 years ago. It's relatively new. And their system is still confused sometimes because you may have a few payroll accounts for First Nations. So say one account is for the band, there is another account for education, another account for health. And what would happen in CRA's system, they would indicate that the band account is a non-penalty account. But then for education, because it may be called First Nation Education Authority or something like this, or for Health Authority, for some reason their system doesn't catch that. And so we see many times CRA assessing penalties to education, health, and other band-related operations. So all it takes is just sending them a letter saying, we're a part of the First Nation, we should be penalty exempt, please cancel the penalty, okay? Now, on top of the penalty, they also apply interest, right? And interest is applied to the amount we owe for source deductions and the penalty. So First Nations, again, First Nation communities, they should be exempt from that interest as well. Now, if you work for a First Nation organization, not necessarily a community, which may be an economic development corporation, maybe a CFS agency, and any other organization, it's not that straightforward. So there is no automatic treatment as penalty exempt. So if you ever run into a situation where your source deduction payments are late, then you can fill out a form. There is a link to that form here to request waiving penalty and interest. And normally, if you work for a First Nation organization, there is a strong case to request that waiver, just because it's about social welfare, and the revenue agency would normally give strong consideration to First Nations welfare as long as you explain your case really well. Okay. Now that form can be downloaded, it can be filled out and mailed, but also if you have access to your organization's CRA account online, they've actually introduced last year just a direct link there. You can go through an online application to request a penalty and interest relief. So now, how do CRA know that we haven't remitted our source deductions? What's the big picture here? Well, at year end, we file our annual T4s, right? Those statements of remuneration paid. And in there, we report to them how much we withheld from the employees, right? And then their system compares the reporting to what CRA received from us and on what dates. And then this is how they know if we are behind the remittances or if there is a difference in remittances. So it's a good procedure when you file your T4s. It's a good procedure to compare the total remittances in the T4s, what we said we withheld and remitted, to actual payments to CRA, to what they've received from us. Because if there is a discrepancy, then you'll know ahead of time. They'll be sending you a letter asking to explain it, and also asking you for more money and applying penalty and interest. Okay, so let's talk about payroll forms. So there is a pay statement, a pay stub, which I'm sure we're all familiar with. It gets issued every pay period, and it shows our pay and all the deductions. Now there is a T4, statement of remuneration and deductions. It's issued annually for a calendar year by February 28th of the following year. It's usually prepared in personal tax returns, so your employees want to get their T4s as early as possible. So an important thing to remember with those T4s is treaty income is reported in box 71, which is non-taxable income, and taxable income for your employees is reported in box 14. Many times what we see is mistakes made by using maybe accounting software or payroll company where there's no awareness of box 71 or exempt income, and all the income is reported in box 14. So if that happens, then CRA will assess tax for your employees, and they'll also assess source deductions from you as an employer. So if that happens, we really have to amend our T4s, and that's quite a process because CRA have been behind since probably last year because of COVID. So it takes them at least 2 months to process the amendments, which can be really cumbersome because our employees want to file their personal tax returns and their T4s, even if we give them amended ones saying income is exempt, but they don't match with what CRA have on record, right? And so they can't really file their personal tax returns until those amended T4s are processed. So it's just something to keep in mind. Anytime T4s are issued, if you work in payroll, please review them prior to finalizing and make sure all your treaty income is reported in box 71, not in box 14. T4 summary. So that is a form for an employer, so for our organization, and it summarizes all the amounts issued on individual T4s for employees. This is where Canada Revenue Agency would use the amounts for calculating whether we're short on remaining source deductions or whether maybe we remitted too much. So that form is important to review as well because you know, we want to be proactive with knowing what Canada Revenue Agency is going to ask from us. Okay, and we have a record of employment, so that speaks for itself. Upon termination or layoff, that has to be issued within 5 calendar days, and it allows an employee to access employment insurance benefits. So the law is 5 calendar days. I've seen it issued later than 5 calendar days without consequences, but technically the government does have the rights to apply you know, penalties and consequences if we issue an ROE later than 5 calendar days. Other important forms are TD1 form. So this is a personal tax credit statement. It's a form completed by all employees at the start of employment and can be updated as needed. There is 2 of those forms, one for the federal exemptions and one for provincial exemptions. So that form basically lists all sort of possible exemptions that can reduce the tax an employee pays, and it's the employer's responsibility to collect that from the employee, but it is on the employee to fill out the form correctly. If there are any issues and the form is filled out incorrectly, it still gets caught in the employee's personal tax return, so they'll still pay the right amount of tax at the time the personal tax return is filed. But the requirement from employers is to have that form filled out for every employee. Okay. Now, another important form is TD1-IN, which is determination of exemption of treaty status income. So if we have employees that are tax exempt because of treaty status, that form should be completed. Now, if we work for a First Nation, it's pretty automatic that everyone working at the First Nation is exempt. So there isn't really a strict I mean, it's still a requirement under law, but I haven't seen can the revenue agency or the government come in and looking for those forms, because it's pretty straightforward. All our employees, you know, they're treaty employees working on treaty land, they're exempt, right? But if we have an organization that's not necessarily on treaty land, right? Because sometimes we have First Nation organizations working out of Thunder Bay or Winnipeg or Toronto, everywhere, right? But we do want to allow our employees to claim exempt income, then that form becomes more important. Okay, so we'll go through some examples here, but those forms can be and this talks more about the T4s and the T4 summary, so they can be, and also the record of employment. They can be filed electronically or on paper. If you work in payroll, it's really good to learn how to file these forms electronically, because it takes way less time, and then the government receives them right away. Everything is on record, but you can file them on paper if that's more convenient for some reason. So let's check out some forms here. Okay, so the first example I have is just a pay stub, and I'm sure all of you have seen a pay stub. If not yours, then you know someone else's. It just shows bi-weekly pay. There is a gross pay, then there is different deductions, including company pension, group insurance, employment insurance, and in this case, an employee has a payroll loan, it's a payroll loan deduction, and then my gross amount minus deductions equals my net amount. Pretty straightforward. And you also have the year-to-date amounts with the same details. So gross, deductions, and net. Okay. Okay. Next form is a T4. So again, most of you have seen it for your personal tax returns or for your employees. There's just a blank T4. So for taxable employees, you will have their income reported in box 14. Okay, and then all the deductions will be reported in other boxes here. And then if for some reason they're exempt from CPP or EI, then there is a box here to tick to indicate that. And then for non-taxable income, which is our treaty income, we would have a separate box here called box 71, and our income will be reported in a box 71 instead of box 14. Okay, so that's important to know when you're reviewing T4s for your organization. Just pay attention that nothing is in box 14 unless it really has to be there, unless it's taxable income. T4 summary. So this is where, unless we do payroll, we don't normally see that. It's pretty straightforward. It just gives Canada Revenue Agency information about the total number of T4 slips issued, total income reported, employment income, and all the deductions, including employee portion and employer portion. And at the bottom here, it has total deductions, and then minus the remittances, minus the payments we send to Canada Revenue Agency. And then the difference has to be paid if we underpaid, or it has to be explained if we overpaid, okay? So this form is completed automatically by our software, if we use software to prepare and file T4s, or by a payroll company, if we use a payroll company. Now, if for some reason we issue T4s manually and we're not sure how to prepare this form, it's not an issue. If you just send the individual employee T4s to Canada Revenue Agency, they will generate a T4 summary from their system for you. But it's just a form that if you work in payroll, it's good to be aware of, and it's good to review, mainly focusing on the remittances here, just to make sure we didn't under or over remit. Okay, here is form TD1. So remember, there's just a general form for tax credits and exemptions that an employee needs to file. Technically, it's required from either treaty or non-treaty employees. Again, if you're working at the First Nation and everybody is tax exempt, it's pretty clear, then there's not going to be big consequences if those aren't completed. If your organization is based outside of the First Nation, definitely make sure those are completed. This is a requirement. Okay, so this is for your employees, so they would have to go through every item here, every tax credit or exemption, and it self-explains it. Like it explains itself. So when you read through it, it's pretty clear what amount to use and to put in here. So everybody gets the basic personal amount. If somebody has an infirm child under the age of 18, they get additional tax credit for candidate caregiver amount. Somebody over 65 years of age gets an additional tax credit for age amount, and so on and so forth. Okay, for most people, what they would do is they would just put their basic personal amount, because again, if they're eligible for any other credits, it will get caught in their personal tax returns, and they will get those credits anyway, unless something is very significant and an employee wants that captured during the year. And again, this is only applicable if it's DAC tax. Okay, so there's a similar form for Ontario. So every province has a federal and provincial form to complete. And here again, you would most likely just be using your basic personal exemption, which is already inserted here. And then here we go, probably the most important form for all of us is the determination of exemption of employment income. So that's for status employees. So there is two parts here. One is for an employee to complete, right? And they're pretty clear instructions. It says to be filled out by employee. And basically they confirm that they're a treaty person, and they confirm that they're a member of a First Nation which is not self-governed, because all this income tax law applies only to First Nations that are not self-governed. Self-government means they have their own taxation system. Okay. And then there is the name and an address. Do you live on a reserve? And then employee certification, saying just all these things here. Then there is the employer's portion. This is where we as an employer get to determine where we have to charge tax, or our employees, do they have to pay tax or not? Okay, and sometimes it's really straightforward. Okay, sometimes you just have to go here through employment situation. So if an employee is resident on reserve and works for the reserve, it's pretty clear that we can continue here to employer certification, because all of their income is exempt from income tax. Okay, then we can have a situation where an employee lives on a reserve, but the employer is not resident on the reserve. So we maybe have an economic development corporation that is not located on reserve. Okay, so then you have to go through conditions here. For as long as the employee performs more than 50% of their employment duties on a reserve, then they're eligible to be tax exempt. Now, if they perform less than 50% of their work on a reserve, then there is a proration, and it tells us to continue to section 2.6, which speaks about prorating the income to taxable and non-taxable based on how much time the employee spends on the reserve. Obviously, you may want to support the fact that your employees work more than 50% on a reserve. Okay. Now, if an employee does not live on a reserve, an employer is a resident on reserve, then again, there is a 50% test. If most of their duties are performed on a reserve, then their income is tax exempt. If they perform less than 50% of the duties on reserve, then you prorate again. And then there is two other paragraphs here saying that even though the duties may not be on reserve, but all the work they do is not of a commercial nature, and it's for the benefit of the community. And you can definitely see if your organization meets one of those criteria, and then the employee would be exempt from tax again. Okay. So there is like a few situations here that you have to go through, and then employer has to sign the form as a certification that you know, this is a situation. And then this form is the one that supports not deducting tax of exempt employees. Now, many times what happens is there is a determination, like there is an automatic thought that, you know, everyone is exempt because we have an office on a reserve, even though our employees work off the reserve, right? So I strongly suggest go through this form, because it gives a lot of options of how income can be exempt regardless of being on reserve or not. For as long as your employees are treaty employees, they can still have their income exempt, because you just want to be proactive and support the fact that you're not deducting any income tax. Now, what happens if we don't deduct income tax and at some point our organization gets reviewed and the revenue agency says, you know what, this wasn't exempt income? And what happens is the employees are assessed that income tax, and the employer is assessed the penalty and interest for not deducting. So we can be subject to penalties and interest if we don't deduct for late first deductions, right? So it's just a good thing to know where we stand exactly, to go through this form. Again, it's pretty easy to read through it and go through the scenarios and see how we can actually support intelligently that all our income is tax-free income, even if we're not located on reserve. Okay, so switching gears here, we're going to talk about payroll accounts, so categories in our bookkeeping system. So of course we have the expenses, which are our wages or salaries, benefits, EI and CPP, then there is pension, and there is group insurance. Then we have liabilities or amounts owing that would be presented on the balance sheet, right? So all those deductions that we've taken from our employees and haven't remitted yet to the revenue agency or to pension and benefits provider, they would be sitting in amounts owing and payables. So then we'll have those accounts. And also if we owe vacation to employees that hasn't been used yet, or hasn't been paid yet, then we would have a payable for that vacation. For most organizations, at audit time, we'll have a payroll accrual. So again, if I have a pay period that ends not right at the year end, which would be true in 90% of cases, then whatever in that pay period belongs to the year end has to be recorded in the year end as a payable. Okay, because just to recognize a payroll in the proper year. Okay, and then we also have employee advances receivable. So if we provide advances to our employees, then we'll have a receivable, like a holding account showing whatever is owed to our organization by the employees. Okay, so let's talk about payroll processes. So again, year-end payroll accrual. So we're not going into much details here. We'll have a separate session speaking about it. But really, it just makes sure that all the payroll expenses that belong to the current year are reported in the current year. Then payroll liabilities, so those amounts owing to the revenue agency for CPP and EI, potentially for income tax. pension payable, and group insurance payable, those amounts owing, it's good to review them at year end, because sometimes things get misposted and we may be showing that we owe more or less than we actually do. So how do we know what the correct amount is? Well, it's our first remittance after the year end. So if I'm remitting for March, say on April 10th, then I know how much I remitted, and the only payable at the end of March should be my first remittance, assuming I'm current with all those deductions, right? If I'm late with deductions and I may be behind a few months, then all these amounts that I'm behind should be recorded, should be shown as a payable, as a liability at year end. Payroll advances. So this is where we see a lot of adjustments at year end, just because many times advances are given but not necessarily received back, or maybe advances are given and they're repaid but they're not applied to reduce that advance balance. So it's important to review the advances that you've given to your employees and just have a list by name and how much is owed, to make sure that those employees are still there, that it's recoverable, and to make sure that they really haven't repaid their advance yet. Now, it is a really good procedure to have as little as possible of payroll advances at year end. Many organizations would have a process in place there. They would say you can get an advance, but it has to be fully repaid by March 31st. And this is because we really don't want to get into reconciling those advances and making sure they're proper at year end, at March 31st. And it can get messy. So now, payroll preparation. It's important to have at least 2 staff members involved. So one would be the preparer and another one would be the approver and reviewer, right? So the approver would normally be a program manager or somebody on the leadership. And this is because payroll can be highly susceptible to fraud, right? And even errors. So when I was still a student in the accounting industry, one of my first experiences with an audit where we went to a First Nation, and it was a first-year audit for the firm I worked for. And once they started learning about the First Nation and getting into the processes, they've discovered that there were at least 15 employees on payroll that didn't really work for the bank. So what happened is the payroll clerk was the only person responsible for preparing and processing and approving and doing everything with payroll. She could add new employees, she could set their pay rate, and so there was definitely misappropriation or fraud going for a number of years, because those 15 employees really never worked for the bank, but they were receiving payroll, right? So it's in payroll, it's very important to have a second look and a different person approving it. Adding new employees and editing wages, wage info should be done by the approver, okay? Now, another thing in payroll is sometimes timesheets are used, right? So people are paid not necessarily a salary, but they're paid hourly based on actual time worked, and they would use timesheets. And so many times we see where timesheets is just submitted by employees and then processed as is, right? There is no way for us, an accountant, to know if the employee actually worked those hours they report. So it's very important that those timesheets are reviewed and approved by the employee supervisor. Okay. Just as an example, one of the First Nations I work with, we noticed a trend where those timesheet, the timesheet payroll, so they have 2 payroll for salaried employees, which is the payroll service, and then they have timesheets, which is for casual labor. And so we noticed that that kept climbing and climbing and climbing till it reached like $50,000 per pay period. And it started from like 15 and it got to 50, right? So when we started looking into it, we saw that there was no process in place. Nobody was approving it. People were just submitting timesheets. And some of these people already were on salaries with a band. So they had a full-time job, but they, viewed some of their work as extra duties they submitted timesheets for in significant amounts, right? So having a process to review and approve those timesheets, and maybe even having leadership involved to just be aware of how much casual labor is happening for different programs is really important. Payroll advances need to be approved by supervisor, and we want everything in writing, right? When it comes to payroll, just to make sure we have full support for anything we do there. Now, I've seen First Nations charging an admin fee for advances. So if employees go to, say, ASCII Financial or another service, they pay a fee for getting access to payroll advances. So again, I saw First Nations charging a small fee, like say 5% of the advance for as a processing and administration fee. So that's possible as well. If you talk to one of those firms that provide advances, they would say, no, you'd have to be registered to charge that, except what the First Nation is charging is just a fee for the extra work they have to do to process the advance. So that's something I've seen done. Okay, so then let's talk about some more processes. So payroll can be prepared in-house, or we can use a payroll service. The benefits of using a payroll service is really preventing errors and calculating those statutory deductions, CPP, EI, and income taxes, and also in issuing payroll forms such as T4s and records of employment on time and with correct information. Okay. Now, if you're using a payroll service, their fee normally isn't high. You're still in full control of your payroll. However, it's important that you supervise whatever they do. So just like with T4s, really review them, because most payroll services aren't too aware of exempt income. Majority of their clients would not be tax exempt. Right. So for as long as you're fully involved in whatever they do, it could be a good idea just to make sure all your deductions are properly calculated and on time, and so are your forms. Now, review payroll allocation to programs. So we can have a situation where certain people work in more than one program, right? And one of the programs needs more expenses than the other. So this is where we can get creative, and we can review how much time that person spends in a certain program and allocate a part of their wages to the program that really needs it. And it goes also for chief and council honorarium. Like if some members of our leadership spend a lot of time on a certain project or certain program, it's good to review their compensation for allocating to that program. Like say if they spend 50% of their time on a certain project, nothing prevents us from allocating 50% of their honorarium to that project. So year-end vacation accrual, like we said, if we have vacation owing to employees they haven't used yet, there's going to be a payable. And then consult the Ontario Labor Board and the organization's lawyer regarding employment matters. Wrongful dismissal is the #1 cause for lawsuits against First Nations. And in fact, it's the #1 cause for lawsuits for any businesses in Canada. So for me, if there is a contentious employment issue, I always contact our lawyer. Like I just have a direct line with him for it. So if somebody says, okay, I'm going to complain to the labor board, or if somebody needs to be terminated, it's well worth going through the lawyer and paying their fees just to prevent those wrongful dismissal issues in the future. If your employee goes to the labor board or to court, in general, the courts and labor board will favor the employee's position just because they're considered a person with less power as opposed to an organization. So it's very important for an organization to have their case documented. Okay, so for employment policies, again, it's important just in case of employment issues, so we can support our organization's position that the policy was communicated to an employee, and the employee can't say, I didn't know that, you know, I had to show up to work every day and work 8 hours. And, you know, there's many different cases you can see. Okay, thank you for your time.